Hello, everybody. Joe Malone here, coming to you live on this Friday, on the 13th of January, on Dallas trading floor. Hope everyone has had a good week today. The markets seems to be kind of going up again. I think it's. I don't think the rally is going to be long lasted, but it's definitely out there. So I mean, I think that we may be looking at a little bit of a chance to make a little bit of money on the upside. Um, I am both long and short right now, so we'll get into those slides here in just a second. Hope everyone is doing well. Won't be broadcasting on the Martin Luther King's holiday, so won't be on Monday. We'll be on Tuesday through Friday, hopefully next week. So everybody that is looking at the time, just look out for us at that time. Interesting thing, I want to kind of bring this up for everyone. Goldman Sachs, it looks like it's an interesting situation. They had started a consumer lending operation, and it just hasn't worked out. I mean, it looks bad for them all the way around. And basically, just kind of so you can see this, Goldman Sachs. They basically said, that they had lost slightly more than $3 billion on this since 2020. I do think that the banks are weak right now, and we have to be super careful with the banks. But I want to kind of put that out there to everyone. So the question is, are we potentially in a situation where some of the banks are going to be weak, some of the big money center banks? And I do think that is the case. And Goldman Sachs is putting this out there, but if Goldman Sachs is weak, you can be assured that Bank of America is weak. So that's something that you really ought to be kind of concerned with. So here's the thing about that: you want to be careful about buying bank stocks right now. I do think that they're going to be sort of in sort of a problem here. Well, one of subscribers on the on our service, our Discord service, sent us this thing in. It's called the Wall Street Cheat Sheet. I think it's great, by the way. And yeah, it's not scientific or anything like that, but kind of interesting. The question is, what part of the cycle are we in? Well, up until the beginning of last year, we were definitely in the euphoria stage. I mean, nothing could lose. You just put a little bit of money on the roulette table and it paid off just about every time. Well, it pulled back from last year, and I think that we got into the kind of complacency situation. People didn't change their charts all that much, their stocks all that much, and then we kind of started to go down. And then towards the end of the year, it kind of got anxious. I mean, it kind of got anxious. I do think we're in a little bit of a bounce of a bounce up here, kind of in the denial stage. I still think we have a ways to go down, and I do think that we may, and this is why I'm showing this about Goldman Sachs. I think this could trigger a panic stage. Now, I hope that doesn't happen. I don't like to see panic selling like anyone. I just like to see a nice upward motion in the stock market. But I don't think that that is indeed kind of where we are right now. I think at least in the cycle, we're sort of in that denial stage where I don't think I lost so much on my account, and everything is kind of just moving along here. I'll just stick in it. It'll come back. Please don't do that. Please, if you're down more than 6% on any of your, I mean, not more than 7% on any of your stocks, really consider selling. And the reason why, of course, very simple. Um, if you sell, if it's down more than 7%, do consider selling, because I do think it makes a big deal, a big difference. Just I really do. So if you're down more than 7% in this kind of market, consider selling, holding, and then waiting for an upward trend. All right, I want to show you the chart for Goldman here, just so that you can see kind of what I'm talking about. Right now, uh, we're kind of, if you look at it, it's sort of got it coming up. So you think, wow, that's looking good. It was up today, up about 0.92%. But I really think that this is false. This is kind of, I mean, I definitely think that it may be running into some trouble. As you can see, it's off a little bit after hours. That's not unusual. But I think that be a little bit careful here. If you do decide to buy something like Goldman, consider putting in that stop loss immediately. But I definitely think the banks are sort of showing signs of weakness, and we may be entering a situation here very quickly where where it is definitely an issue. Let's take a look at the three major indexes today. They're pretty simple. The spider, the S&P 500, which is represented by the ETF called the Spider, SPY is the symbol. It was up today, about 0.4%. So it's looking good. We've got some good. This is a very broad based index, and it does look like it is recovering somewhat. It looks like it's broken the downward trend. This is why I believe, at least for the time being, we're in this upward trend. We're definitely in an upward trend in the market, but I think it's a bear market rally and not. Now, here's the thing: bear market rallies can be very, very good opportunities to make profits because typically bear market rallies have the highest amount of increase of any of the upward trends. I mean, so that's part of the reason why I'm going long in some stocks, and I'll talk about that in just a second. On the Nasdaq, though, even though we're up, the overall trend is down. As you can see, it came up to the 50-day moving average, and that is indeed showing some strength finally, but overall, the market is weak. This is one of the reasons why I decided to short Apple today. Why? Because Apple is a major component in um, in the Nasdaq. So my thinking is, at least for the Nasdaq stocks, the big ones like Microsoft, Apple, um, Netflix, and Amazon and Google as well. That is a downward trend. So that's one of the reasons why you think, Jim, you're going to look at my stocks here in a second. You're like, why are you shorting Apple? Well, in an upward trend. Well, because I think that we could see that reverse lower. We'll see. I won't let it go too far, but I definitely think that we could see it moving lower. On the other major index, the Dow, that's the Dow Jones Industrial. Not There's two Dows, by the way. There's the Dow Jones Industrial and there's Dow Jones Transports. I'm showing you the industrials. That one's headed up very solidly. So the old school big cap stocks like Boeing, stocks like Caterpillar, they've been showing some remarkable strength as of late. So those are looking pretty darn good in terms of where they're coming from. So those are looking pretty good as well. So really, it's the Dow stocks and the S&P stocks. That's where you want to concentrate. That's where you want to concentrate on the stocks. All right, I have kind of a special thing for you today, and that is I don't know if you can see this. There we go. Okay. These are screens that I did today of stocks that I do think may present an opportunity to move higher. Now, I own one of these stocks. It's Celsius Beverage, and I'll show you that in just a second. But there's some of the other ones on here that I did own, Lattice Semiconductor, LSCC, that I did own. And I do have several other ones. So I kind of wanted to put this out there. I'm going to probably be putting up this list on the link probably after the show. Currently, it's not up there. I want to show you the whole thing, the whole list that I'm looking at right now. But until we do that, let's take a look at four of these stocks that I think be might make some sense for us to get into. And I want to show you just the charts on these. So without further ado, I'm going to go over here to the breakout list. This is kind of what I'm trying to do. I'm going to put this together, I think, hopefully on a more regular basis, but this is the stock breakout list. I do this for myself, but I think I'd like to share it with other people just because I think it's a good way to look at stocks. The first one is Allegro Microsystems, ALGM. And then basically, this one is very interesting stock. It's doing well. Now, you're saying, well, that's a NASDAQ stock. You don't want to be doing that, Jim. Well, I do think that one of the things about CanSlim trading, and I am a CanSlim trader, is that we've got to look for the new in CanSlim. We got to look for that's the in CanSlim. We got to look for the new ideas. This is a relatively newer stock, and its price action is very very good. Now it's a little bit extended right now. The 21-day line, it's about right now the price is about a little over 8% above that 21-day line. So with this one, I kind of want to wait for it to pull back. So here's what I would suggest, and I'm probably going to do this myself. I haven't put the order in yet, but Allegro Microsystems, I'm looking to buy a half a position of this at about 31. Now currently it's 32.52. So hopefully there'll be a little bit of a pullback. It's gotten a little bit ahead of itself. Pull back to that 21-day line. That 31 is right at about 5% above that green line. I think you can see it on there. And I've marked it on the chart. That's where I'm probably going to get into it at about 31. So that's one you might want to take a look at. I'm probably going to make a little video on these four picks that I have for the week, and we'll track the progress of them. But that's going to be so. Watch out for that. Please subscribe, by the way, to the service. If you subscribe to if you subscribe to the YouTube channel, that's youtube.com/Dallas Trading Floor, you will get notified of these upcoming stock picks for the week. So that's something to do. Now, if you're on TikTok, I'm going to try to put a link on the bio. I haven't done it yet, so don't do anything yet. Haven't done it yet, but I'm going to try to put a link on the bio to that as well. Let's look at the second stock that I'm kind of looking at very hard. I haven't bought this one yet, but I'm looking at it as a potential acquisition, and that one is Perone Networks. Now, this is an odd stock. It's out of this one is out of Israel, and it's looking like it's looking very very strong. I want to show you um, the checklist on it. We have a 100% checklist on this one. It's looking very very strong from the screen. By the way, these are all from the screens, and we're coming right up. And I definitely think this could break out. It's under accumulation. I don't know by who, but it is under accumulation. And so definitely want to show you this one. Now, if it moves above, I wouldn't buy this under $30 because I think that's a key major resistance point is $30. So I would wait until this thing moves above $30. And as you can see in the after hours, it's definitely moved above $30. So I think it's okay to buy this if it moves above $30, but not below that. It kind of sounds strange, but that's sort of what you got to do when a stock breaks out is you got to buy it as it's breaking out. But 100% checklist, PERI is the symbol on this one, and hopefully it will break out, and it won't be on Monday, but maybe on Tuesday. So get ready for that as well. But also, you got to be a member of the Action Trailers if you are just if you're on TikTok, just jump on over to the link, and you'll be able to sign up for that. So get that going as well. All right, let's look at two other ones. This is also called. This is one I did own this week. Did really nice trading on this. This is showing good strength. It's called Lattice Semiconductor. The symbol of this one, LSCC, Lattice Semiconductor, and it's forming this very nice cup. It came all the way down, touched the 50-day line. It looks like it's going higher. So this one definitely is good. Also, 100% checklist on this one. Wanted to show you. I misspelled it there, but after hours price of 72.80. If it moves above that, I think it's possibly a buy. So I wouldn't buy it below that. I know that sounds strange. I want to see it power above 72.80. So I would put a limit order in on this one, a limit order at 72.80. Symbol on this one, LSCC. So definitely one that you might want to take a look at on that as well. All right, let's take a look at the next one that we have. And this is the final one I have. I'm gonna try to put out a little video on this to kind of show you what's going on. This is Celsius, and I definitely have Celsius. I definitely I own Celsius currently, and it is moving very nicely, and it's moving right above this reversal line. So this one kind of is a little bit trying to get above that reversal line, but I definitely think it possibly is where you could add at about 110. So we will see. It pulled back a little bit. We had it. We had it on the list. But hey, here it is. So let me show you my current holdings so that you can get a kind of an idea. Currently, I hold four stocks, just four. One is called AEHR Test Systems. That was up today very nicely. I did buy that, and we're up. The volume is up on that one strongly as well. I also own an interesting hospitality stock right now. It's called TH Target Hospitality, and that one was up just about 33 cents. It's a relatively inexpensive stock at about 18. I bought it a little over 18. I bought it right about 1802. It's currently at 18. So it's not really not really here nor there. It's kind of just right at the but I definitely think this one has a potential to move higher. Target Hospitality, the reason I like this one is because they're in the business of providing all of the management services and all the personnel to run hotels. So companies that own hotels, especially the limited service ones, they contact Target Hospitality and they don't have to get staffed or anything like that. The Target Hospitality just does it all. It's kind of a turnkey system, sort of like if you have rental homes, if you've ever done that. It's sort of like a management. It's kind of really a great idea. It's sort of like a property management company, but for limited services hotels. So kind of an interesting niche. I think it's a good niche. And Target Hospitality, TH is the symbol of that one. I did buy a full position in ExxonMobil. Now, most people would say, well, why did you buy Exxon? Because the price of oil is going down. Well, the thing about ExxonMobil is it's not just the price of oil on Exxon. What it is it's a complete management system. It's got, they've got of course, they extract the oil, they own, they do drilling and like that, but they also transport, refine, and retail fuels. And I think that's going to continue to be a good business. I don't see it like everyone is, that everyone's going to go electric tomorrow. I think that's going to be continue to be a great business. So I'm looking, and the reason I did this is coming right up to a buy point. I bought it right before the buy point, but I do think that long term, this one's good. It has about a PE ratio of about 10, which is extremely low considering how high quality this stock is. So this is sort of my longer term bet. ExxonMobil right at in buying it today. The fourth one, of course, is Celsius. We talked a little bit about this one. This was up today it was up about 3.6% today, and it was up on price. I definitely, this one is kind of, it seems like every market cycle has one of these beverage companies like Monster and stuff like that. This one seems to be the one for right now. This is really a kind of not really a day trade, but this is going to be a short term trade more than likely. This is very much of a fashion item. So I'm trading it basically on that kind of basis where I'm just looking at it as something that may or may not long term is not going to be a great investment, but at least on short term, I think it may be doing pretty good. Probably will, these are kind of the investments that get bought by Pepsi, and that's kind of thing. I have two shorts right now. I am short Lululemon. I have not done well on my shorts there. I shorted it at about 310, and I'm having to rethink my situation here. I shorted it on a gap down situation. I may have got this one wrong. So don't follow me on this one, Lulu, because I think I may have gotten this one wrong. Now, I did short a position of Apple today. Why? Well, you think it's going up. Why would you short something that's going up? Because I think long term, Apple is going to be much weaker over the next 6 months. Tim Cook, who's the CEO, is taking a 40% reduction in his salary. That just tells you something. I'm not really, I'm thinking that we could see a lot of funds get out of Apple in the near future. So Yeah, so that's kind of basically that's kind of basically the long and the short of it. So, all right, it's kind of trying to make a joke there. All right, let's get to the questions. Thank you so very much for everybody waiting. I know it's Friday, so it's the kind of thing we like to see. All right, hey, what are your thoughts on XLE? Now, the XLE is the spider, the exchange traded fund for the energy sector. There's 11 of these spiders that each cover a separate area of the market, and this one is it is covers energy. So let's bring up the chart here just real quick for the XLE. I'm just doing it right now. There we go. Okay. So this is the chart for the XLE here. Just wanted to get it up there. And what I'm going to do is I'm going to reduce that so we can get a better look for people watching on TikTok here, so we can see this chart. There we go. All right. So here we go with the XLE. We definitely came down and we tested. We didn't quite go all the way down to the we didn't go all the way down to the 200-day moving average. We definitely got some support. Low point 82.65 on this one. Currently, we were up today, but we're up today, and this is key on weaker volume. Okay, so I do think that we do have kind of a weak rally here in the energy stocks. Now, here's the thing about the energy stocks. The XLE is made up primarily of only two stocks, and that is Chevron CVX and Exxon Mobil XOM. So one of the reasons is I do like the XLE going forward a little bit. That's part of the reason I bought Exxon, but I decided not to buy the entire um, index. And the reason I didn't is because I do think that it's more of a stock pickers market right now. We have to be a little bit more discerning, and many of the drillers are experiencing difficulty. So, um, we just can't really look at it like that. I mean, so that's the reason why I went for the 900-pound gorilla, which is ExxonMobil. That's why I bought that one long. So I think it is looking pretty good in terms of longer and midterm on the earnings for the larger oil companies. I know that goes against a lot of grain, but you know oil and gas and fuel for your car, that's one of the things that people just aren't they don't have a choice. They're gonna drive less. Yes, they're gonna try to do more, but at the end of the day, you got to your heating oil and your car and your diesel and the diesel to move things around. Well, that all kind of comes back to the companies like Exxon, and so that's one of the reasons why I don't think it's going out of business anytime soon. And it's it's unfortunate because I think that these are a little bit sometimes a little bit overplayed, but I do like the XLE personally. With the size of Exxon, I'd probably go with Exxon. Why? Because it's right at a buy point, and that's the reason why I went with it. So uh, I definitely think the XLE is good, and that's a great way to play it. But what I'm doing here is I'm looking for something that is not just um, not just the entire sector, because I think they're clear leaders, but I want to try to get the best performing out of the sector. So that's why instead of going with the XLE today, I went with Exxon itself. So thank you for that. That's a great question, and I really appreciate it. All right, let's take a look on TikTok. Uh, there was a great question from TikTok on Goldman and the earnings on Goldman. So let me just jump over here to Goldman and see if we can analyze that The symbol, of course, is GS, and of course, it's one of the largest investment banks in the world. Now, what I'm going to do here is, is show you the. This is the difference between technical analysis and fundamental analysis. What I'm going to do here is a little bit of fundamental analysis, fundamental analysis on this stock. Let's see if I can jump on. Oh, did I get no the wrong one? Okay, so there we go. Here's Goldman Sachs. Let me get my ugly mug out of here so that we can see it without any. So there we go, Dan. Sorry, I had to remove some of the windows there. I'm getting a little bit better at this, thank God. I mean, it's about time that I do get better at this. But what I'm going to do is I'm going to shift on over to the charts here, and hopefully you'll be able to see this on TikTok. I'm trying to just show you the fundamental analysis part of this. Now, here's the thing about Goldman Sachs. You would think, wow, Goldman Sachs, they've got it dialed in. They're everywhere. Blah blah blah. Well, that hasn't been the case. Look at this. Look at the trend in Goldman Sachs. Their sales have been down. Can you believe that? Look at that. They're downward trend. All right. The next quarter, downward trend. Now, their sales were up this quarter, but the last sales report is showing earnings per share down. So they've have 1, 2, 3, 4 quarters of downward trend in their earnings. Not a good look. I think they may be in trouble. Actually, that was the headline today in the Wall Street Journal. They're going to be laying off people, believe it or not. So here we go. Even though they have this PE ratio of 10, which is very very low, like Exxon, and they've got this awesome cash flow, the problem is I think there's trouble lurking. I think there's trouble lurking here. So let's compare, and this is if you want to be investing in the bank stocks, I don't think you do right now because I'm going to compare Goldman Sachs, and what I'm doing here is I'm comparing essentially the sectors here, and what I'll put this up in just a second. This is the chart of Goldman Sachs here, and then I'm going to put in Exxon, and I'm going to show you the difference between both of these charts and why I don't think that I think you want to stay out of the financial sector, at least for right now. So let me go ahead and show you this comparison chart that I think that you'll be very interested in. At least I was when I saw it. So I'm going to go ahead and show you Goldman Sachs versus ExxonMobil. All right. So you would think ExxonMobil would be, the end all be all in terms of, Goldman Sachs in terms of the banks would be one of the best ones, and you'd be right. But look at this performance over the last year. If you started last year and you put $1 into Goldman stock and you put $1 into Exxon stock, well, you'd be about even on the Goldman stock. You'd be down a little bit, maybe $2, maybe 2 cents. But if you put money in the ExxonMobil stock, you would have been up a lot. I wish I had done this because, boy, I tell you, if I had a crystal ball, I would have done this because Exxon stock is up 80 cents this over the last year. So even at that, it's looking very, very good in terms of the oil sector versus the financial sector. So let me go over here and show you just the last 3 months, because really, as John Maynard Keynes once famously said, I know this is getting a little in the weeds here. In the long term, we're all dead. So we want to find something that's moving the best. As you can see, this is just over. Well, it just over the last 3 months here. We've had much better results with Exxon. Let me just sort of. There we oh, no, that's wrong. I'm still getting used to the new year. So let's do that. 9/1/2022. There we go. All right. So this is showing it correctly. Even even starting just 3 months ago, you can see even just starting 3 months ago, you can see that Exxon has well outperformed Goldman Sachs. Now they are over the last 3 months, they're both up, but Exxon is trending better. So I definitely think not only is there trouble with Goldman, and they are losing money, they just haven't realized it yet, and realized meaning in the accounting sense. But I think that there's trouble brewing. That's why I want to go to Exxon. The interesting thing about Exxon and many of the oil companies, as well as the insurance companies, is these are companies that really don't need outside financing all that much, because everything when Exxon sells product oil on the world market, it's paid for in dollars. So very interesting situation when it comes to that. So kind of wanted to bring all that up. All right, let's take a next question from TikTok. All right. Hey, thank you, man. Thank you for that, Mr. Diggett. Let's look at PLL. Kimchi slice. I like that. I like that. Kimchi slice from TikTok. Let's look at PLL and take a look there. All right, PLL. Piedmont Lithium. Okay, this is a lithium play, and of course, as we all know, the constraint really for the EV revolution is the minerals. So uh, the constraint the constraint is the minerals. But here's the thing: I don't believe. I wish I was more. I don't know. I wish I was more. I definitely think EVs are, the coming thing, but I also think it's going to be a big surprise. A lot of people are going to realize, unfortunately, with EVs that certain things won't work as well. So I don't think the gasoline engines are dead by any stretch of the imagination. I definitely think that we're going to have gasoline and diesel engines for a while. Why? Because of the reliability thing. Electric trucks sound great, but there's a lot of places that don't have charging stations, and when it gets cold, electric vehicles don't work as well. So I'm a little bit dubious on the lithium miners. I definitely think it's a good area, but I think it's an area. It's a very trendy kind of thing to be in. I like the gold miners actually better than the lithium miners. But here's the thing. Here's where we have. It's up today. This is a this is a uh, company that is going for lithium. I don't like the speculation. I think this is too speculative. Now I do know that lithium is going to be a major thing, but I think the better look on this, the safer way to play this lithium play is to go to some of the big miners that actually already have mining operations out there, and that would be like FCX or some of the other ones. This is Freeport McMoran, which has mining operations all over the place. I like the chart on this one a whole lot better, and this is a whole lot better company than Piedmont Lithium. Nothing against Piedmont Lithium, but if you want a miner, see, here's the thing about mining. When you're mining you know, when you're mining, you can get lots of different minerals. It's not just lithium, not just copper, not just gold. So the diversified mining companies, I like to limit my risk, and I like the diversified mining companies. One of the companies that I really like right now, at least in terms of the mining sector, is FCX. Let's kind of look at some of the attributes that FCX has. I just want to bring this to your attention so that you'll know. Um, on the checklist, it has a 67. Not the greatest. I'd rather see a higher number than that, but it's pretty good. Where they're off, of course, is their earnings and their sales. Their sales have been a little bit down, but I think that is not necessarily a problem. One of the things I really like about Freeport McMoran is the technical action. It's basically cup with handle, base formation. We're 8% above it, so we are a little extended, but I like this action on this stock. I really do, because this means that it's going higher. And even though So we have a little bit of room to go. So I like the technical action on this miner, Freeport McMoran. Now, would I buy it at this level? Well, probably not. I want to wait until I'm within 5% typically of the 21-day line, and we're not. We're up 10% up over that. So if this pulls back, I'm probably looking at this one in terms of being in there for a mining company. So instead of PLL, consider FCX. Just consider it because I think it's a stronger candidate than than I think it's just a stronger candidate out there, and it's probably a little bit easier to deal with. All right, let's take a question from YouTube. Thank you so much. Thoughts on MU? Is there a reversal trend? Now, MU, as you well know, is Micron technology, and they're one of the leaders in all kinds of memory semiconductors. So this is a key company in the space. The problem with Micron is it has been, we have been in this downward trend. Oops, we've been in this downward trend. So even though I like the semiconductor area a lot, unfortunately, I probably would not be a buyer of Micron. And here's why. Let me just show you this chart. At least I wouldn't buy it long. So let's see if we can put this line in here. Why am I drawing this line? This is the reversal line. Okay. So currently, uh, you know, currently we're in a downward trend on Micron. As you can see, it's come. The question is, has it reversed higher? And that's a very good question to ask. Well, it's come up to the reversal line. You see, it's come up to the reversal line, but I still think it's a little bit below that. Here's the kind of caution flags that I have. It's only got a 23 relative strength. I wish it were better than that, but it just isn't. Great company, but I just don't think this is a great place to buy it. Even though it's within 5% of the 21-day line, the checklist is only a 44%. So I don't think this one is the way to go. Now, I do think you need exposure to the semiconductor area. So here's what I'm going to do. I'm going to show you what I would do with within the semiconductor sector. And what I'm doing is I'm putting this is the what I'm doing is I'm comparing Lattice Semiconductor LSCC with Micron. Now they're not really the same in terms of you know Micron is in memory and Micron is definitely in memory, and Lattice is in what they call programmable. Sorry about this, programmable logic. And I think programmable logic is really. I think the demand for this is just off the chain because what this allows you to do is it allows you to create a chip that's general purpose and then and then field program it to their specifications. I think this is really powerful technology, and I think it's starting to really catch on in terms of in terms of where we're going. So programmable logic, I really like that. LSCC is big into that. So taking a look at the last, basically the last 90 days with Micron and LSCC. Micron not doing that well, but LSCC doing very well. Basically, if you bought, even though we've been, at least in the beginning, we're sort of in the beginning of an upward trend in the computer and excuse me, in the semiconductor area. I was buying AEHR, it's a tools company. I do believe very strongly that it's going to be limited to certain companies, mainly smaller companies. And one of the ones, Micron, is just not performing all that well. There's a lot of issues in terms of where they are in their cycle, the semiconductor cycle. Whereas LSCC, that seems to be working very, very well. So if you're looking at Micron, I would consider possibly possibly looking at LSCC. The question is Micron going to be reversing its trend and going down? I don't know, but I think that there's other better places to be in the market, and it definitely is sort of it's come up and touched that reversal line, but and I want to make sure that I'm showing this correctly. We just because this is always the there we go. So let's go over here to I'm going to show you that the full chart again for Micron, and I want to kind of analyze that just real quickly. For that one, basically, it definitely has come up to it's come up to the reversal line, and it looks like it is going lower. So it is going to go lower, but it's still in a downward trend. But I think that you're better off going long on something like LSCC. Just my 2 cents there. So thank you for that question. Great question, by the way. Thoughts on we did MU, we did that one. And okay, XOP versus this is from Charles. Love your questions, Charles, always. XOP versus the XLE. Now, let's take a look at these. These are both sector ETFs. And this is a great way to go if you're looking for a leader, you can't find it, and you want to be in the 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 right sector, but you don't want to be um, you don't necessarily know where the leader is. That's when these sector spiders can be very, very good. So let's do the comparison real quick on the sector spiders, the XOP versus the XLE. So this is um, XLE. So really what this is these are kind of two different ways. Oops, let's put that in there. XLE. Kind of two different ways of slicing the petroleum sector. One of them, of course, is with the select spider, and then the other one is with the oil and gas, only the explorers. So because oil and gas is bigger than just I mean, um, oil and gas is more comprehensive. So if we just go with the let's go over here to the comparison. Yeah, there we go. So there we go. It's looking good. Finally, my computer's working. It's so nice. The XLE has been outperforming the XOP, and why would that be? Well, the reason I think, and this is one of the reasons why I did buy a position in ExxonMobil. Why? Because it's not the drilling that's making the headway right now. It's the refining and retailing that's doing a little bit better. That's why the XLE, even though the XOP, even though it is doing well and it's in an upward trend, it's still underperforming the XLE, at least over the last year. Let's look at the last 3 months because that's really the tell. You could talk all about last year, but it's like everything else. I mean, in the long run, we're all dead. So we have to be, we have to go with the shorter term, I think, to really make it look right. So let's look at just the short term, and that is there we go. So this is the XLE versus the XOP within the last, really since October. So we're here in January. This is really the last 3 months, 90 days. And as you can see, they kind of started to diverge here on in October. And that makes sense. That absolutely makes sense. Whereas the XLE it was is outperforming the XOP. The XOP is just the drillers and the just the explorers, and then the XLE is the whole sector. So my take on this one, I think you got to go with the XLE on that. All right, thanks. Okay, let's thank you very much. Oh, hey, SPC, SB, what do you think about that? Well, I did make some money on space a few years ago. Well, not a few years ago. Yeah, a little bit over that. Virgin Atlantic, but I think it's kind of a meme stock, to be honest with you. The real leader, of course, is SpaceX because they've got all the government contracts. That's the key. Um, and I've I probably for some reason it's showing blue. I think I did this for one time. Yes, there is some action on it, but let's kind of take a look at it. And All right, so here we go with space. I think this is. I think this stock is in its final frontier. I don't think it's doing well, as you can see. I mean, 16 relative strength. It's below the 200-day line. It's below all the major indexes. Let's take a look on the technicals. Yeah, well, I'm sorry. I misspoke. I guess when a stock gets really cheap, a lot of these technicals don't play. You really have to be above $10 for that to work. But, yes, it's trending up a little bit, but, I can't get too excited on it. I think that it's dead money, especially in this market. Now, if we were in a hot market where the Nasdaq stocks were and the meme stocks were going up like 2 years ago, I'd say, "Man, this is jump in it." But right now, with this, we are in a little bit of a we've been a little bit of an upward trend, but, I don't think, overall, I think that the market is in a downward trend. So I wouldn't touch this one right now. I just think it's not time. Everything goes through seasons. It's just one of those things. So everything goes through seasons. And, taking a look at the kind of from start to finish, it's looking ugly. I mean, it's just looking ugly. So I would not I would not probably be I would probably not be a buyer of space. Sorry. I just wouldn't. Its time has come and its time has passed. All right, let's see. I've made 40%. Oh, wow. Absolutely you should sell. You should absolutely sell. If you've made 40% on options in space, I think you should definitely sell. Okay. That's a different case. That's definitely sell. Definitely sell because it could go higher, but then again, I would sell. I would definitely sell. I think that's interesting, but I would sell that definitely. All right, probably last question here. Thank you so much for watching. Um, BLGC, and this is from Noah. BLGC. Got to jump on over to the right area. Yeah, I got to jump to the right chart. GL, BLGC. Oh, I got this. I got the symbol wrong. Um, oh, BIGC. Excuse me. I got it wrong there. BIGC. Don't know this. As you can tell, I don't know this. I don't know this symbol offhand. Got it. Yeah. Interesting. Big Commerce. Okay, Big Commerce. I've heard of Big Commerce. This is down in Austin. Again, just really out of favor in this part of the market. I mean, this one trades. I think you really have to look at this relative to some of the bigger, companies like Salesforce, stuff like that. It's kind of in the same area, computer software enterprise. Just not looking very good in this one. Kind of, I guess, it's sort of like a kind of an kind of a software portion of Alibaba for the US. I don't know, but let's compare it. I wouldn't buy this one. Let's just kind of look at it in terms of its peers, and I'm going to look at this relative to Salesforce, which is in the same area. This is underperforming Salesforce, so I probably would not be interested in this one just because of that. That's a pretty big issue for me. The fact that this one is underperforming Salesforce. So let's look at it. There we go. All right. So let's see. Go over this one. Yeah. Okay. So what I'm going to do here again is I'm going to look at it. I basically don't like to look at a whole year. I think that's just too long. I like to look at basically the last 6 months or so, about last 3 months or so. That's really my sweet spot when it comes to this. Now, big commerce just not just taking a dive. I mean, look at that. In November, it just goes south. Um, CRM, which is Salesforce, is not that strong a stock either, and it's not doing well either. It kind of held even over the last 3 months. CRM, but big commerce not so much. It's down 30%. I would just I would just say no on that one. Thanks for watching me on Facebook. I'm getting some more people on Facebook. Please like the show. I so appreciate it when you do. Obviously, thank you very, very much for watching. Please tell your friends if they want to get some stuff. And also, it's great if you want to get some, some more content. I'm going to be putting out both free and paid content, obviously, because I need to, I need to pay the bills too. Go to www Dallas Trading Floor, sign up, and it's free. So and you can get off the list anytime you want. So if you're not that is as interested as you will be, but one thing I will please do this, and I would it helps me very very much. Just please hit that like button. That gets us out. The algorithms seem to really like the like button, so hit that like button and and do if you're interested in more of this kind of content, just go to www Dallas Trading Floor, and we have some free and paid content there. So I'm going to be trying to do more about entry points and stocks that are coming up in the future. Still have to do a little bit more on that, but thanks again for taking a look at the show. So appreciate it. Of course, please tell your friends, and we will be back not on Monday, on Tuesday, um, because of the holiday. But till then, everybody, happy trading.